Hello everyone. In this video, I just wanted to go over ways of forming a directional bias. I'm going to cover a few different ways in which I do it on a day-to-day basis and a few tips and tricks on that front. So just to begin with, the very first and most basic thing you can do on any given day, at least to not get caught offside in how I do it, is through the daily time frame and just checking for one time framing moves. One time framing is simply where price is closing consecutively above the previous day's high, or when if it's uptrending in an aggressive manner, or reverse previous day low, whilst not breaching the previous day's low at all or in any sort of way. So, for example, this isn't classified as one time framing. This isn't, just to be clear. You know, you're not closing above. You're wicking, and then you start closing above here, and this could start to be classified. So you've got one day here, then you've got another day. This is now starting to be one time framing, and I would say after the third day of one time framing, so like upon, so you've got this initial candle here, then this second candle closes above, okay, and then you've got the third day which closes above. Now I'm saying upon this third time, this is one time framing, I'm not going to look to fade any sort of move towards the downside the following day. Like, I'm not going to be aggressively shorting at all. You can only have in my rule book that I can look for longs on periods like that, and it really helps because, especially in periods like, if we just go back and find something else, right? Even on periods like this, you closed above, you then close above again. This is now an aggressive move, okay? And even here, look, you closed above, you closed above. You don't want to be shorting aggressively in these moments. And, even if you've got other signals saying you could be shorting, like it's just a big heads up to not short, at least just yet. And it never pays to be, it always pays to be patient, at least in my opinion. So, just be patient on those. You're not breaking any previous lows, you're just continuously heading higher, and it's like a 3-day pattern at the minimum. There's been moments in the past where I've seen it go on for many days at a time. Even here, for example, look, first green candle, second one, third one, now this is one time framing, next day massive up, next day again still up. And then you only start to really say it's not one time framing, in my opinion, when I have like 2 down days beyond that or after that, which is like, okay, now we've cooled off, or we start to breach, for example, this low. I would say, once we start to break this low, the uptrend is now losing it. So just, if I see one time framing, I'm not interested in at least trying to mean revert it so aggressively. Even if we do go above 80 or whatever, which I may cover on later. The second one is more of an intraday one. Again, so these are more all intraday really. I'm not really swing trading. And it's to do with London session. You've probably all heard me go over this many times before. Okay. But London session, highs and lows, forming the daily highs and lows is like the easiest way for me to mean revert back towards pivot or a high and low. So if we just look here, for example, I remember this day last week, it was really fantastic to see this in action. And, no one's going to really talk about this, if I'm honest. And it's to do with, if you've got this high here, right? So let's just rewind to this day here, okay? And the day opens at this point here. Okay, this is the marker of daily open, and you can see that the daily low, so like moving into New York session, you've got the daily highs in Asia, and then the lows taken out. Okay, and that low is now put in. If we look at the time, for me, I'm UTC +0. It's put in at 8:30 a.m. London session. Okay, so from statistics, and you can go and test this yourselves. London session is really low, has the lowest probability of putting in the daily low. Again, you can check this on. There's many different ways to go about it, but I'll briefly talk about statistics here because it's all good and, well saying that it's got the lowest probability of putting in a daily low or high, but also checking the distance, price traveling away from it before the statistic likelihood that, it becomes unlikely you revisit the pivot, is irrelevant. So what I mean by that, just to really clarify that, is we've put in this low for the day. I'm looking to fade any sort of up move away from it back towards this low. If we just name this London low, I'm looking to fade and move back towards this. But at what point do I say this is not worth fading and move back towards it? And for me, I've got statistics on this. It's around the 3 to 5%. If we break 3% away from this, this target no longer becomes likely. But anything below that, so now it gives you like a window of like, where's this low put in? Let's now measure like 3 to 4% away from this. it's still well far away. You can see up here, price will come all the way up to here, and you can still look to me revert back towards it. And this is still well within that. You see this, you come up, you take these highs, you then see some sort of deviation here without completely filling the wick, and then you revert back towards it. Just one way of continuously looking for, a daily bias. This is really, really powerful for me. Even on this, people might be thinking this is really good, bullish. And for me, I'm just thinking, well, what are the levels I can find to revert back towards this pivot here on the day? And the target would be to hit it before the end of day. Okay, so definitely keep that in mind. This is a very, very, very powerful thing I use almost every day. Even for trend continuation, you would be trending daily highs putting in London, you get a pullback, and you just look for, where within this zone here are you looking to get involved to target back towards London high, because the daily high of the day. So tons of ways to be using it. Honestly, it's very, even like today. Just again, I don't trade every single move towards this, because you need to learn when to do it. But you can use it to prevent yourself from taking bad decisions, because again, today the daily low is in at 6:15, and London session for me, by the way, just to be clear, is 6 a.m. UTC to 12 p.m. So it's just a 6-hour window. And I'm thinking about even stretching it a bit further forward to 4 or 5, but I'm going to really do some testing on that. But for now, my tested regions are 6 a.m. to 12 p.m. Daily lows put in at 6 a.m. here. You get the rally, people might get bullish, whatever, but you target back towards the low, and you see trend continuation in this case here as well. So really, really powerful, very basic, but I thought I'd mention that. The other one now is to do with, so that's London session high, low putting in the daily high, is market structure from the open. I mean, I've discussed this before, but I'll bring it up again because of how powerful it is for me. What I would do is we're going to put a marker from the open level, the open candle, and even if we just reverse back towards, I don't know, somewhere like here. So there's so many signs here for me that this is definitely heading down, even if it's like this is a poor low. So I'm just going to talk you through my mind. At this point, for example, even though if I take no trades, it doesn't matter, it still provides me with an option to not long. Sometimes knowing not to take a certain side is just as powerful as, knowing when to execute. It just prevents you from taking a bad setup. But I've put a marker at the daily open. A lot of people always track, and I'm sure everyone I talk to trades, they trade intraday. Sometimes, and so do I, and this is why I think it's really important to come up with your own different concepts and thought processes around things, is to not just listen to the herd. For me, tracking the daily and weekly and monthly market structure isn't actually going to be beneficial towards me when I'm trading intraday 2, 3, 4, 5% moves. It's not beneficial. I'm usually in a trade the day and I'm out of it the same day. Previous information isn't so much relevant to me. I want to know what price is doing today, at most maybe yesterday as well, which I'll cover as well. But you can see here, we open here, and now I'm tracking structure from the open. Okay, so you've got the initial highs put in, and now we've got an initial low. Okay, so you've got the low of the open, the high. Now we've got lower low. Now we're downtrending. Okay, at least until this high is taken. Then you got another higher high here, or a lower high, sorry, and now we've got another. We've broken now towards lower lows, and you can track these pivots by using like Williams fractals to mark these out, whatever. But what is price doing today, and just simplifying it to an anchor point, and then tracking market structure from that point forward, 15 minute, 5 minute, 30 minute. It doesn't matter. You'll still get a fairly clear picture, and if you don't, you just don't use it as a bias, in my opinion. You look for other things that I'm mentioning here, for example, or I sit out completely. But you can see here, it's tracking from it's very clear. And again, now you're combining that with what I mentioned previously about the London session. Look, we've put in the London session low here, like I've just told you. We're still putting in these, the only way I'm thinking that this pivot, for example, here isn't getting revisited is if we break this high one, because that's the break of structure, and we breach above like 3-5% gap. You see what I mean? To see like a big move. So yeah, you're expecting continuation at that point. Even there, you can see it doesn't. And by the way, just to talk about structure, I don't want to see a wick above. I want to see time spent above. In my case, a few 15-minute or 30-minute candles spent above, at least 2 or 3 to recognize acceptance. Okay. But nonetheless, it sees continuation, and even to this day, or right now, we're still in that period. So that is structure from open, and if you're a higher time frame trader, you can track structure from the weekly. So what is this week doing? What is this month doing? I think I find it beneficial, at least, do as you please, but I find it beneficial from the traditional ways of tracking structure. I definitely prefer this way, at least in my trading, at least. So, take that as you will. And the final thing is fairly basic, but it's like candlestick formations, at least on the daily. I find it to be the most beneficial. But also you can do sessions. Again, I won't cover this too much, but obviously each session itself can provide its own candle. You can do this with exo charts, but nonetheless, I'll show you what it's like on the daily. Just looking for a wick, for example, if you want to call it a shooting star or a bearish engulfing, these type of patterns can be beneficial. Something like this. Oh, I've seen it here. So on the daily, something like this is great. Okay, you're moving up. This isn't technically one time framing until the third day, in my opinion. Close above, you wick above, you close below. Okay, this now is like starting to form some sort of bearish bias potentially. At least at this stage. Obviously, you can then start to pick apart all the other things I mentioned. What's the structure doing on today? What was the delta looking like at the highs? And then, what's the average target for something like this? And you can really test all this stuff out, as I do. I don't want to dive too much into that, but you could easily, some things I'll say to you, define what you're measuring. It's all good saying a shooting star, but how do you really define what is a shooting star? For example, what's the body to candle, the wick ratio, those type of things. And you can really start testing things out, rigidly, and get a really good understanding for percentage wise what your bias is like to play out, in that sense. But you can see here, let's say we've got this, what's the likelihood it then revisits the previous candle's low, in this case, because it's a bearish shooting star, and start testing things like that. For example, bearish engulfings. I prefer shooting stars to some extent, but bearish engulfings or bullish engulfings are also something I'm looking out for. I've got a ton more things to come. I think this video is already longer than I want it to be. I didn't want it to be too long, but I've covered a few things there that I think you will find beneficial as to how I track bias, candlestick formations, market structure. There's no reason why you shouldn't be coming into a day. I check all of these every single day, and it's part of my plan and my process for forming, what am I going to be doing for the day ahead. Okay. Maybe I'll cover another video going over candlesticks patterns. Check out Entropia on Twitter. Check out Exo Charts. Check out myself. I've got nothing to sell you. Just go and check it out if you wish. Tons of new things coming on that front. But yeah, I appreciate you all. Thank you very much for watching. Hope you found it valuable.